Hey, good afternoon. This is Chris Robinson, Robinson Ag Marketing for today's post-close grain and livestock comments for Thursday, December 4th. Well, a pretty good recovery day in the corn. We got more good exports of corn, but we've had great exports for corn, and we can't get corn above the 200-day moving average in March. So take it for what it's worth. Got to feed this bull every day. It was a good recovery. We'll see. I'd like to see D26 corn get north of 470. Hopefully, maybe go to test 475. So we're trying a better recovery in the beans. Spot month got a little bit of a recovery after about a 10-cent range. I think we're still waiting for China. I put in my letter this morning. China needs to come up with that 10 million metric tons, yesterday, because they're stuck at two. Buying three or four cargoes here, it may look good if you're on TV and you don't understand what's going on with beans, but three or four cargoes, five cargoes, that's just, that's the tip of the iceberg. We need, a ton more than that to even catch up to what they promised us. So again, I'm still in the opinion that maybe these guys have already bought the beans on the board. We're still running into the issues where our beans are super expensive compared to South America's. It's getting a little bit tighter, but still, our beans are more expensive. Our meal is more expensive. So the net change for the day, our March corn up 3 3/4 cent at 447 and a quarter. We need to get above 450. If you're reading my letter, you'll know why. If you're not getting my letter, robinsonagmarketing.com. Take a look at it, sign up for it. March soybeans 11.28 3/4, up 3 1/4 cent. I'm more concerned about November 2026 beans. Again, I want to make sure that you guys at least protect $11 until the end of January. We got to get through two USDA report. We got the December one, then we got the January one, January 10th report. I hope it's bullish, but I don't want to be in a situation where I'm talking to guys on January 12th saying, well, nobody told me to hedge anything. I didn't know we could break so hard. I don't want to have that situation. So even if you're not working with me, I don't care. Somehow, somewhere, get a hedge there and defend this good rally that we had in the soybeans because we're one headline away, one disappointment away from having that thing shift. South America is planting a boatload of beans again, right? They have no weather issue yet. Um, so every day that goes on with ideal growing seasons, they're just going to have a huge crop. And no politician, I don't care who you are, I don't care if you're a communist or the biggest right wing person on the planet, no politician has figured out how to get around the law of supply and demand. Just remember that. We do need this business back from China. Historically, China took 25% of our crop every year. We grow 4 billion bushels. They take a billion bushels. That's sort of the deal that we had. But they've been sitting on their hands and they need to come back. Even what they promised us for the next 2 years, it's basically just to go back to normal. It's not like they said that we're going to double up to catch up. So, all right, that's all I have to say about that. March wheat, we had, Stats Canada came out, bigger wheat crop, bigger canola crop. Surprise, surprise. If you're looking at July Chicago or July KC, we're, 15, 20 cents away from retesting the contract lows. I don't want to be in a situation where we've got next year's wheat with a sharply lower floor. So defend what we can right now. Hopefully, we get some turn of events that get wheat going. But it's the same story. There's just wheat. There's a glut of wheat in the entire world. And I got to wrap up with kind of the good news of the day: the hogs and the cattle. Cattle. I'm looking at April cattle. Cattle has nearly clawed back half of what we lost. We lost $45 in 5 weeks. I'm sure you guys are all aware of that because I heard from a lot of people who said, gee, nobody told me that this could happen or we couldn't see this happen. We had a tremendous correction from 251 to 205. If we hit 228 kids, that's halfway back. Take that what you want. There's a gap up there around 233. I can't promise you we're going to get it. I know a lot of people would like to see us get it, but this is a mulligan, right? And you guys play golf and your breakfast ball, whatever you call it. If you were kicking holes in the wall 10 days ago, this is your mulligan. Protect that revenue. And again, I say this all day long. A hedge is not calling a top. A hedge is not getting bearish. A hedge is capturing business revenue. And yeah, I hate to tell you, there's a cost associated with protecting prices. Nobody gets out of here for free. If we knew where the prices were going to go, first of all, why would we wouldn't even have to trade, right? We just wake up on the day that we all knew the high was and market all of our animals. It's not the way it works. So we had a horrendous sell-off. We've almost clawed back half of it. Get after it. Do something. And if you're selling into it and you're scared to sell into it, you can re-own it afterwards. Hedges aren't all about puts, puts, puts. Perfect example. If you had sold soybeans right before we had that meeting in South Korea, and if you didn't re-own it, yeah, you're probably furious because we rallied $1.50 in the spot market, right after you sold it. And so hedging isn't all about just puts, 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 right? I'll just leave it at that. March feeder cattle, same math problem. We finished up $4 today after another $7 trading range. That contract had an even bigger correction, right? An $85 break, right? How about that? From 378 to 293, we've clawed back a huge chunk of it. 336 is halfway back, and then there's gaps up there at 346. Again, me pointing out those gaps, do not think that that's me promising you, whoa, we're going to get there. It's a target. It will be nice to see. The question is, what are you going to do about it? And then with the lean hogs, April hogs finished up $1 higher on the day as well, just kind of getting dragged along with cattle. We've had a 38% retracement there. And if you look at that contract, we went from 94 to 81, right? Basically a $14 break. We've clawed back nearly 38%. 86 and change is 36%. Same math goes. I'm not going to tell you that we can't go higher, but I definitely want to try and capture some of this revenue bounce. That's what a hedge is. So hopefully my information helps you. Robinson Ag Marketing. I had a webinar today for people that are interested. If you didn't see it, you can call me. I'll send it to you. Just about a 10 or 15-minute meeting explaining to you what I do. Look forward to hearing from you. Have a great night.